Hi guys, good evening. I hope you all had a good weekend. Hi Falcon, hi Shrikant, hi Abhinav, hi Vasudha, hi Amit. Yep, I had a good time. Yep. So guys, many things have unfolded in the last couple of days. Hi Shabrinath, hi Gaurav. And as a result of that unfolding, uh, things have really gone, uh, I would say, difficult for market to react on. Market is not sure what to do. And as a result of this banking saga, the money which has been invested is going into tech, it's going into gold. Some of it also is transmitting to uh, Bitcoin. So I really wanted to spend the initial 10 to 15 minutes uh, explaining what is happening with the banks and what can be understood from the current situation. How we can understand the impact of it, and how would Fed going to take this into consideration, what is happening, and what would be his next steps on the day of CPI, or not the CPI, on the day of FOMC meet. So hi Uday, hi Ali, hi Missy, hi Shavik, hi Rohan, hi Vijay, hi Shri. So let me start a whiteboard first. Let me see if I can use whiteboard here. I need to go to, I need to stop sharing and I can use the whiteboard. Yes. Just let me see if you can see the whiteboard, because I want to explain a couple of things here uh, before I go into the analysis for tomorrow. So I just want to check on YouTube if you can see my whiteboard or not. Guys, can you confirm if you can see the whiteboard? Hi Srini, hi Vikram. I think you can. So guys, this is how the bank operate. Okay. Bank has two main transactions. Banks take money as terms of deposits from retailers, from other uh, institutions, and give them interest. Okay. And bank use this deposit and issue loans on which bank earns interest. So this is which comes back to bank. This is what bank gives to the consumers. Okay. What has happened with the high rate of interest, that the amount of deposits which came to the bank in the last 2-3 years, bank invested that money. So one piece is bank gives loans to earn the interest, plus bank put that money into some secured investments where they know that yes, after a few years they can get some investment return back. So this time they invested in US government bonds. Okay. And try to understand this a little deep, because the impact of this is felt by almost everyone right now. So US government bonds have a maturity of 10 years, 20 years, 30 years. Okay. And they pay a yield of, in 2020, like when these banks, these big banks, small banks, every bank, they invested everything in a safe zone called US government bonds. They were paying 1.2 to 1.5 rate of interest. Don't quote me on the numbers. I'm just giving you a rough estimate on these yields. Now, when they invested, every bond has a principal price, which is called as bond price. So for a 10-year bond, this is the yield, meaning this is the interest US government was supposed to pay these banks after the maturity of 10 years and based on their coupon size, whether the coupon size of 6 months, annual, or at maturity. Some are also called zero coupon, meaning the interest was pre-cut and they were only sharing the principal, which will become the net amount at the maturity. So when the interest rate goes up for these yield, the price value of the bond goes down. So if the bond was, let's say, $102, I'm just taking a rough estimate, and bond yield was 1.2%. Now bond yields are 4%, and this will be around 95, 92, 93. So whenever the yield prices goes up, the price of the bond goes down. And when the price of the bond goes down, so if you try to sell that in the market, it means you will have to incur a current loss. These losses are called, this is the word, I'm not recollecting the word. These unrealized losses. These losses, unrealized losses, just because the bank has not sold these bonds. Bank is going to hold them until maturity, and at the end of the maturity, they get this interest from the government. Now, what exactly is happening that during this period, the deposit increased substantially from 2022 to 2023, and the interest was from 0.0544%. Now you have to pay around 3 to 4% on the savings account, on the deposits. In addition to that, there's a minimal growth in the loan. Okay. And when there's a minimal growth in the loan was supposed to provide them the money to offset the loans or deposits. Now, as a result, bank were in a run state because bank were short to provide the money. So what government of US along with Fed did, they provide them a lending window. Let me just clear this. Come on, clear. I'll open one and So in this case, what happened was when these banks, they found that, yes, they are short on money to provide to the depositors. So what Fed along with US government did, they opened a lending window of around $300 billion. Okay. So what Fed meant by $300 billion was that we are going to respect your long-term securities, like your 10-year, 20-year, 30-year. Right now, the original price was, let's say, 102, and now they are 90, 105, and it is at 88. Again, don't quote me on these numbers. I'm just giving an example. 107 to, let's say, 75. That instead of taking unrealized losses, I'm going to give you a loan of $150 billion, which you can use, and $115 billion to provide the liquidity between the banks. Now, once you have $150 billion, what banks did was bank can mortgage their assets. What are assets? The bonds which a bank has taken. Now, bank can mortgage these assets and get a loan. And because the government knows that these are not junk loans, these are actually really good loans, so they are least bothered because they know that they are going to get the money back. So this is how Fed has infused the capital into these banks. Second thing, what banks have done along with Fed. Fed said that I'm not going to take care of all these issues on my own. Big banks, you have to take care of these issues as well. Because I don't know how many more small corporate community banks can come into this trouble. So what you can do is you can start collaborating, start pitching in few billion dollars. So JPM along with big banks, what they are doing is they are trying to overtake smaller banks or provide them a lump sum, like in case of SVB or FRC, they are providing a $30 billion window along with a consortium of 5 or 6 banks. Why they are doing so? Because Fed has given them $150 billion and Fed has told the big banks that if you can manage, please go ahead and do it. Otherwise, I'm not going to manage this issue for you because you are investors. You should be taking care of your investments on your own. And why did big banks did that? Because big banks know that if this thing spreads out, all the impact will also be felt by them. Because once there is a panic, big banks will not be able to bypass that panic. Also, the example of SIVB, which had a market capital of about 20-30 billion dollar and had a net asset of $209 billion. When that bank went down, it took away almost $200 billion from the market capital of the big banks. Okay. Now, all the big banks thinks $30 billion is not a big deal. We can write that off in the next couple of years. And by that time, the situation gets better. And then we will be able to make out that money. But if there are more banks, how many more banks can we save by this situation? So that is an open question right now. We have one more bank, which is FRC, plus Credit Suisse. Credit Suisse has been bought by UBS for a very minute valuation, but that was forced on UBS and UBS took that into account and now is providing liquidity to Credit Suisse. Also, you would have heard in the news that yes, there is a global swap agreement between the big banks. This is done to manage enough liquidity in the market so that there is not a shortage of dollar anywhere. So Bank of Japan, European Central Bank, Bank of China, other big banks, and Federal Reserve, they have opened a swap window. So instead of settling on a weekly basis, they are settling on the daily basis. So whenever they are doing the transactions, they will settle at the end of the day so that there is no liquidity crunch anywhere. That's how the bigger banks are controlling the liquidity scenario. Plus, FOMC has already added, or I would say Fed has already added $300 billion to its balance sheet to provide the lending. This is not a bailout, but this is some kind of a bailout because in case of bailout, the central bank will wait for years and years and years. Here, central bank is taking mortgage as a collateral of the current bonds, which are from the government of US itself. So it's not a bailout. It's providing enough liquidity. But question is the situation is going to get bigger from here? Very likely, because the impact of the higher interest rate will be felt by all the banks. Now, the only rationale right now is that the big banks, which were either addressing the venture capitalists or addressing the crypto, they are the only one to suffer right now, but all the other banks are safe. That's the idea which Federal Bank is trying to give. And they're trying to say that every deposit is secure, the banking system is resilient, all the stress tests have been good, they should not be having any issues whatsoever. So they're trying to build the confidence. Now, why they are trying to do that? Because if they do not do that, it is going to create a terrible wave of panic into the market, and it can lead to some substantial withdrawal of dollars from the accounts. And when that happens, it's like a vicious circle. If the depositors start taking money out from the community banks, put that into the bigger banks are also not issuing that kind of loans. So the problem will spread across the board. And once the problem is spread across the board, this will be out of hands. So just to calm the waves, just to address the elephant in the house, Fed is saying that there's absolute resilience in the banking industry. as of now. Now, what it has done? It has done one thing. It has done that the investment which came in from the lending, right? It covers the deposit. Plus, there was a 150 billion deposit, 100 billion, 150 billion dollar, which also came into the balance sheet of Fed. It pushed triple Q tech stocks, because in case of paranoia in banking stock, tech stocks were very good area where the money could actually flow, because they were least likely to get hit by this kind of situation. Yes, interest rate does matter to them, but ignoring the interest rate, they would kind of safer bets. That's why Microsoft, Nvidia, Apple, Facebook, they were Google, Amazon, everyone is going like haywire in the last few days. Also, you see gold also did a 200-point rally, because gold is a safe haven. Bitcoin or crypto, in terms of see, once you have enough money with you and you know that going into depositing into bank will have an issue, that money will have to go somewhere. Bitcoin is also one more area where it actually went in. Now, whether it is going to sustain, I don't know. But on Wednesday, understanding the FOMC thoughts as of now, I think they are going to do a 25 basis point hikes, and they will pursue more hikes in the future. They are not going to cut down, because the moment they are saying that they are cutting down, or they are stopping, or they're pausing the rate hikes, it is going to give a really, really bad thought or bad address to the market that yes, situation is really, really critical in America. And you need to understand there are very clear two rules. Let me write those two rules about the rates. See, usually when the economy is strong, is going up, rates will go high. When economy is bad, rate cuts will happen. Okay. When the rate cuts are over, only then that's a market bottom in the. So if rate cut starts, it means the market or economy is in bad shape, and economy is not going to address the inflation and the banking issue is much bigger than anticipated. That will cause really bad. We might have initial one day move higher, but eventually we are going to make a very big downward. Also, the unemployment rate. Unemployment rate is pretty low at this moment. That's why economy is strong. So unemployment rate, UR plus economy. If both these are strong, rates are going to go up. If rates are going to go up, it means central bank, the government of America, believes that the system is really strong and they can still manage situation out of it. If they start to pause, that will give a panic sign to the market that yes, there is something wrong. There is something wrong, and Fed is not able to address, because the moment Fed will say, I'm going to pause, the market will not like it. Right now, everybody is saying, oh, there's going to be rate cut and tech will go up in this. No, once there will be rate cuts, the market cannot go up. In case of rate cuts, market only goes down, and market makes a bottom when the rate cuts are over. So if we are at 4.75% right now, if we go back to 3% or 2%, till that number is not achieved, we are not going to make a bottom. Once that number is achieved and there's another rate hike, that will be the market bottom. And when the rate cuts are peaked, usually market peaks there. Remember that. These are principles in economics. When the rate cuts and rates hikes and unemployment rate peaks, like in case of unemployment rate, it's 3.4%. This is a very low unemployment rate. If this is at the bottom, and the rate hike is at the peak, market is going to make a peak there. Market will start to come down from there. If the unemployment rate is high, let's say 7% or 6%, and rate cuts are done, that's where the market is going to make a bottom. This should give you a clear idea that we are well away from the market bottom, but we are very near to a market peak. So what happens on Wednesday can be a very clear direction towards what is going to happen in the next few months, few quarters. If we see further rate hikes, it means market still has the ability to bear it and we can go higher. Yes. If there are rate cuts or there's a pause in the rate cuts or there's a language which comes out from the FOMC conference that yes, they are worried about the banking or they are worried about the resilience of the banking sector, market will not like it. That's why if you see in the last 3-4 days, Biden is coming back again and again, saying that the banking sector is resilient. They're going to take care of each and every depositors because they do not want to create the panic. And if they do not want to create the panic, it means they want to address the other issue, which is inflation. Inflation impacts much bigger area as compared to this one, the banking issue. All right. So this is what I wanted to share based on my understanding. I hope you got some idea of what is happening. In case you have any questions, I can share my Zoom link if you want to join that. I can address your thoughts and then I can spend time on the weekly analysis. So I'm sharing my Zoom link on the YouTube channel. It's in the chat. You can join. And let me just share the screen. Okay, so let me read. Unrealized losses for the small banks is 650. Sharpreet, that's a situation which is unrealized. So yes, you are right. Situation can get really ugly from here. Preem, I'm doing good, buddy. So guys, I have shared the link. If you want to join, please come and clear your points. Because when we discuss, we can I can cover points which I have not even shared in the meeting. Okay, so the link is shared. I've disabled the waiting room, so you can now join in directly. Anybody who has any questions can raise your hand on the Zoom meeting and I'll try to answer. In between, let me read. Momin, yes, that is correct. Jeremy, hi. Will liquidity have other impact on Sam, like housing market, just wait on a housing market. Housing market can get really ugly from here. Yes, Vivek.
Hi, Naval. Thanks for the explanation. I have a small question. So let us as we are thinking that agar so if Fed stops interest rate hikes, then the market thinks that there is a bigger problem in the banks and it will sell off. But at the same time, if it continues with the rate hikes, it will still continuously put pressure on the smaller banks, right? So it will lead to failing of more banks.
See, as of now, they have tried to uh, bifurcate the issue to the banks which are related to venture capitalist and crypto. They still think that the balance sheets or the assets from other banks are in much better shape and they are able to address this issue.
So for time being, they have given a small soft cushion.
They're trying to temporarily provide a mandate, yes.
Okay. So I was thinking so I was looking into the for example, the Manheim car index, and I was also looking into these indexes. So, for example, let us say in maybe in 1 or 2 months, people, what if they stop paying like car payments and these things? So it will also affect the financial system in that way also, right?
See, one thing you need to understand that all these loans which have been issued recently, right?
Mhm.
They were issued at a higher interest rates. Okay.
Yes,
And bank have like the mortgage on the cars or the EMIs on the cars is almost double to triple. A car loan used to be $300 to $400, that's costing $1,000. So bank has already tried to leverage the situation out of that in the last few months. Okay. Now the failure of anything like a bigger bank, maybe like a PNC bank or a uh, another big bank, that situation can only come up if they are not able to manage the deposits. Now, as per Fed has given enough liquidity. Plus, the international banks have also given up the dollar swap facility so that if you have some other currency in some other country, you can easily swap that out and manage dollars and provide liquidity to other banks. Also, the central banks are sitting on losses, unrealized losses, because central banks also put money as investment so that they can provide money as dividend to the government of any country. So it's a situation which is cash 22. Now, Fed needs to decide whether they still want to take a hike. For me, they will go with a hike. They will still think inflation is still not calmed out, and they will say that yes, they have provided a bandage. Now, banks should manage on their own, like
and they
what
have to figure
JPM,
out.
yes, it's like what JPM, Bank of America did, provide a $30 billion consortium to do. This exactly happened in India around 3 years back when the Yes Bank failed. And when the Yes Bank failed, the State Bank of India worked with other banks and created a consortium which bailed out the Yes Bank. So instead of the central bank pouring in the money, this was the bigger banks who came into the rescue, overtook. There will be some mergers which will happen, and these mergers will reduce the number of banks, but it will provide enough liquidity in the market. So as of now, I think this issue will be addressed, but I don't know about the next few months or quarters because you have to understand the loan to deposit ratio. You have to understand what exactly is in their balance sheet, what are their liabilities, what assets they have, what are the current unrealized losses, what are their mark to market losses. You need to look at exactly what is happening in their balance sheets. And if there's uncertainty in a certain sector, that money will not go into that sector. And where that money will go? That money will go to a safer sector, which has no issues. Like if you put money instead of JPM to Microsoft or to Apple, that will be taken as much better option to invest your money than in any of the banks.
But the banks are also invested in those stocks, no, no, Naval. So, for example,
You're trying to mix couple of things here.
okay,
Banks are investing the money, but that's their investment piece. It's not their like how would I say? They are buying the stocks, they are buying through the ETFs, they are buying through the funds which banks have created. Okay, and they are making money on that. And that's why the bigger banks are providing that consortium level of uh, dollar amount to the smaller banks so that they can address this issue. If IT or Microsoft stocks goes up, banks make money from that. But are banks selling them? The answer is no. So they are going to make money from it so that they can leverage the losses on the other asset sides.
okay, okay.
But again, it's a very high level thing. We need to dig in deep, understand the complete composition of their balance sheet. And the composition of balance sheet is only clear once you start looking at their quarterly numbers. Compare them in detail, only then you're going to have. Looking at any of the Twitter accounts or some screenshots, may give you a little idea, but you need to dig down deep to understand what is happening.
Hmm.
So for me, if there is some uncertainty, better to avoid that sector.
Okay. Yeah. Thanks, Nod.
Gaurav, people are thinking equity market, not equity market. If you look at IWM, which is the small scale uh, index, it's down, really, really badly down. It's only the big tech, the big 4 or 5 companies where the money is coming. So it's not the equity market, it's only a few stocks. Yes, Avi.
Hello, Naval Bhai. Naval Bhai, which sectors overall you think will do better,
I
and which
just said
sectors
IT.
will? Yeah, IT is one. Any other
That's it.
sectors you think will benefit,
No,
and which sectors are good to go short on? One is banking.
no, banking is not ready to short. Banking is in a stage where it needs consolidation, it needs much more clarity. So we may not have big moves in banking either. We may have small moves here and there, but it will be in a tight range unless something happens, because the big moves have already happened. Now, once the big
Okay.
moves are done, you need to wait and understand.
Any other sectors that you think are
Yeah,
ripe
just
for
focus
target?
on one, try to make money from there. If you spread across the board, you will not get anything. Focus
Okay.
on few things.
And then secondly, your thoughts on the real estate sector when that may
Real
bottom out,
estate sector, as I
when that
said,
the house prices may bottom out.
again, there's a good discount from last year to today, but the interest rates are higher. Now, there is hardly any demand of any mortgage application if you look at their data. So probably if you start to invest now, start to look out, you may find a good opportunity next 2, 3, 4 months.
For buying a house.
Yes, you need to keep an eye, you need to keep looking, and once you think that the price is there, go for it. You right now there's no bidding wars. Plus the owners are also provide much more discounts. Like 2 years back, bidders were like putting in more than 100,000 on the top of the current price. Right now, nothing is like that. Plus, nobody was doing any inspections or kind of issues which were open. Now everybody is getting those things fixed, because people who are stuck, they are stuck. They want to get out and sell. People who bought recently, they will not sell their houses. So there's not going to be enough demand. When there's no demand, you will have the opportunity to make a cause for yourself. Now it's up to you how you make a deal. Yes. Bargain deals are coming, Sharpreet. Yes. Again, guys, I'm not saying big techs will continue to go up. I'm only saying that the latest what the money came in went into the big tech, the 4 big tech. Microsoft went to 83. Microsoft had a worse quarter. Nvidia didn't do anything. It lost $2 billion on the quarterly revenue. It went up. AMD did all right. It's almost 30% up. So the money just came in and went into these stocks for no reason. And that's where you do not need to fight. People are trying to short these companies. Let There will be a time when you can short them, but do not try to fight the trend. Look at the price. The price is going higher and higher and higher. If it fails at a certain level, only then go short, but not now. See, I'm not going to cover anything more because it's only a few minutes for me. So let me just take a moment and then I'll go to my daily analysis. Yes, moment.
Well, I'll be really quick. How is gold going up in all of this? It was
See,
almost
gold,
3% up on Friday.
see, gold will go up. As I said, where will the money go? That 300 billion, which was infused by the central bank, that kind of offset 6 months of balance sheet reduction. Now,
Mhm.
where will that money go? It not going into the bonds. It is not going into the other sectors. It's only going into either big tech, gold, or Bitcoin, and all of them actually moved. You will not find any reason for them to move, but like, can you explain why Microsoft moved?
No, not really. No.
So
So I mean, what is your take? I mean, is there
gold
a
is like I said, I think a couple of weeks back, around 1813, 1814, 40, when the gold was there, that
uh
gold is going to go to 2800, 3000. I
I
think
see.
it's about to break out.
All right. We'll keep watching the charts then.
And I would say if you want to buy some gold.
Yeah, I think so.
Any dip which comes maybe to 1950, 1960, gold should be taken.
All right, wonderful. Thank you.
Yep. All right, guys. I'm going to start my daily and weekly analysis. And if you have any questions, just I'll try to address in the last 5-6 minutes. Okay, so let's start from the scan. I want to do an inside week first. So we have SC, Zoom, and Save. SC is really, really good, and I've recommended SC in the last few days. So SC is really good. On the daily inside days, ABNB, Snap, W, AMC, SPY. So not much. So SPY is SPY. I don't use ABNB, and instead of Lulu, I will bring in SE. And Airbnb. Let's take a. All right, let's start from ES then. So ES on the weekly view first. You see, these are Heikin-Nishi candles. These are non-normal candles. So Heikin-Nishi candle is suggesting that yes, we are still in a bad momentum, which is the red, red, red. If you look them into the normal candles, you will see something different. You will see that yes, we made a small body with high wicks, meaning we were confused on Friday on the weekly basis. If you see them in Heikin-Nishi, you will see that we're still in a negative trend because we are making lower lows, lower highs, but we are somewhere kind of bottoming on ES. So it's not giving me a clear picture. So I'm going to go and ignore the weekly chart, come to the daily chart. On daily chart, you see we had dodgy 2 days, and then we started to move up. Again, the base is still not flat. So it is not giving me enough confidence that yes, I should go long. One thing which I have recommended when people are using Heikin-Nishi, when you see flat tops, do not try to go long. When you see flat bases like here, do not short. This is the area to go long. This is the area to go short. Right now, I have a small wick underneath here. So unless we close a little higher, this wick will not go away. So the higher possibility is if we can cross the 12 EMA, where we are struggling right now, and if we can cross 39.95, which is a bigger resistance, we could hit 40.50 to 40.70. Okay, so there's a high possibility we might reach there. Again, if you look at the normal candles, you will see that there is something wrong. You will see that yes, there's a green, then there's red. But if you look at Heikin-Nishi, it gives you a clear picture that yes, the trend is not clean. That's why I recommend people to use Heikin-Nishi, because it is a green candle. It's not red and green. It is green. That every dip is bought in this market. That's why the momentum is green. But just to have a position which you need to carry, you need a flat base. So that flat base is still not there. Also, The momentum is coming down from the negative side substantially. If you look at the DMI right here, the DMI is coming down. The positive momentum is also not going up either. So it's a state of confusion. That's why we have not a clean base. All right. So I'll not go more into high Kenichi. Just wanted to give you an idea. In terms of level, I really want to go long only and only if you see this area, we got stuck here, we got stuck here, we got stuck here. Right now we are in there. We got the support here, we got the support here, we got the support all this while. So if we can cross this area, okay, only then I would like to go long. I would keep a very small stop loss, which is today's low. If I lose that, I'm going to test 39.15. 39.15 is a really, really important area. I am not making any patterns clearly because I made a higher high and a higher low, but we are still congestion in between. So it's not a clear pattern at all. So there's no candlestick pattern which is giving me a clarity. So as of now, I would like to go high above 39.75. So my bias is now neutral. I want to go long above 39.75. My stop loss will be 3960. My first target will be 3995, which is an important area. 3995, which is a 50% Fibonacci plus the 34 EMA. Then my next area is 40, 20, 25 area. If I cross 40, 25, I would go to 40, 70. And if you see in the last few days, when I gave AMD, Amazon, coin and everything, I gave them 70% conviction. And if you see NVIDIA 258, Google 101, Amazon 101, AMD 97, all these were hit. Why? Because I did not try to fight the trend. Okay, so whenever I put something in blue, that is something which I think is the most likely to break out or break down. So I put that in a blue color. On the downside, and there could be an inside day squeeze if we can break above 39.75. I will not try to jump anything unless I cross 39.75. Market looks really attractive to jump on, but do not do that. And in case of short, sell below 39.50. If we lose 39.50 this time, it will start to make down moves. First 39.15, which is this level, and then we're gonna hit the support of 38.95. So there's a 60-40 chance on this. Between 50 to 75, that's a no trade zone. All right, so try to avoid any trade in that. NQ, I mentioned last time that 12,600 is going to be really good support. It tested that, and right now we are well away from the 12 EMA. So let the 12 EMA catch up or let the candle come down. 12,600 is a 61.8 Fibonacci. So this is an extremely important support. If we lose this, then it can be a fake breakout. Like in the past few days, right? We came and we could not, we have higher wicks, but we do not have a single close above this line. So if we have to go and make some really positive move, we have to have one close or one 15-minute, 30-minute candle above this price as a close. Once we do that, things will get positive. So in terms of this price, see 12,700, 12,750, which was the second target. Buy around this area, and I'm going to reduce it to now 60%. And it to 40%. Stop loss is, I'm going to keep very small stop loss, 12,700. If you go and buy 12,750, keep a stop loss of 12,700. Look for a target of 12,900 and 13,015. That is extreme strength. Or you can buy near 12,600 if you really want to buy. Now, on the neutral side, or if you want to short it, sell below 12,600 only. Do not try to sell. Why 12,600? Because it's a 61.8 Fibonacci level. If it breaks, we have a high possibility of going back to 12,000. So right now, I will not do any trade between 12,600 to 12,700. I'll wait for 12,600. If it breaks, first target is 12,450, 12,445, 55, and then the 12 EMA, 12,385. So there is a 40% chance of shorting. So this is a ES level. Go long about 12,750, short below 12,60. 1% in between. We may have choppiness tomorrow and maybe on Tuesday. And we try to remain in that range. So try to avoid if you want to avoid. Triple Q, 306 was the target. It closed right at 306 on Friday. Closed at 306, could not close and manage above that area. So again, this is a 78.6 Fibonacci. We closed well, like few points below that area. Now, either we will come back and hit 299 and in between the 12 EMA will go up because the momentum in this didn't had the power. Okay, the power needs to come. So I'm only going to keep neutral and short. So I will only buy above 306. I'll say 307. 307 is much better. 307 is right here, 307.25. If it can go above 307, I'll be a buyer. 36 is my stop loss. I'll be looking to hit 314, right here, 311 and 314. And if the strength remains, I think above 100, we can hit 160, which is 339. So once we break out of this zone, we could have a massive momentum on the higher side. So we need to be very, very much ready for 314 if things come up clearly. If we lose 306, we can come towards 300, 250. If I go and short 306, we can come towards 3 or 250, 299.25. Stop loss is 307.25. So that's the indexes. Apple. So Apple was a little weaker compared to the other tech stocks. But if you see, come on, it's making inverted head and shoulders. So the point is it needs to break above 157 to continue that momentum. It closed right on 155. But I think it may need some time to let 12 EMA handle it. So either it comes to 154, 150, 350. I'll be trying to buy a dip on Apple. So buy dip near 153 and this one. I am not selling Apple as of now unless we lose 152. So sell below 152. Either you need to buy above 157 or let it come down to 153, 154. 153 is the middle of this candle 153.50. So it's a good area where you can actually add Apple and then see if it can go. If you try to add here, the stop loss is bigger as compared to the target. The target is here, and then the stop loss will be this big. So the risk reward is bad. It's better to add here so that the stop loss is small and the reward is better. Now let's add the lower target, sell below 152. Target will be 149 and 147. Yeah. So Apple is still by the dip. AMD. AMD, I mentioned last few days, 86 will be a breakout. Since we break out 86, right, which is a 61.8 Fibonacci. And that's why I emphasize on 61. Once we broke 61, we hit all the way 23. Whether you are going up, you're going down, this rule is always hit. Once you cross 61, it's going to hit 23. Now, 23 is an important area. We closed right at that point. 97.60. We are very well away from the 12 EMA and 34 EMA. And the momentum is really strong. The strength is there. We may see some dip into AMD a little bit, but 95 is an area where I would love to add AMD. So AMD is still blue. I want to buy near 95 to 96. Stop loss, I'm going to keep 94. Target is 100. That's the round number, 104.75. But I either I will buy above 100 or I will buy near 95, 96. And that's my, so breakout continuation is right there. Amazon. Amazon did my target right here. It broke out. Now 12 and 34 are converging. It's roughly an inside day, not a cleaner one, but it's an inside day, bounce right from this. So we talked about this triangle breakout. This triangle breakout has finally happened. This is the chart which I showed last time, that there's a triangle breakout. Now this is an inside day. If we can break above this piece, I think we are ready for a higher move on Amazon. The stop loss is 96. If you can take a entry around 97, 98, that's also good. But if you want to really try to play this, it's something which is positively diverging. So Amazon is still positive, but I'm not going to mark this in blue anymore. I'm going to get this into green. I'm going to reduce it to 60. And I really want to buy the dip on this around the range of 96, 97 or above 100. So buy near 96, 90, 97, 98 or above 100. Stop loss is 96.3. Targets are this. Coin. Coin I've been recommending for last 2 days from 60, 70. And it is now at 75 area. It's broke out. And looking at the Bitcoin, again, it's an important breakout at 38. So I am bullish on coin. Coin is now positive. 75 was my target. It hit 75. There now 75 will become a stop loss. Come on. It can come to 88, 90. So target is 88, 50, 82. It's breakout. Why it's a breakout? It's a breakout above 38.2 Fibonacci. Whenever we have breakout about 32, should hit 61.8. So 61.8 is 85. Buy above 78, you should be good. Coin is something which I'm looking forward to for tomorrow. Google. Google is looking really good since 91. Again, I've been recommending this since 91. You see the momentum is carrying forward. Consolidation, breakout, dodgy, and breakout. Now, finally, we have the positive momentum. What I need is I need 101 and 102 and above in entry. So Google, buy above 102, 105, 108, 560, 108.50. Stop loss should be 100. So Google is a breakout, which is W breakout is continuing. So it's good. SE. So for SE, I'm going to make some new charts. So this is my regression channel starting from 40, which is the low. Let's go here. The direction is up. Extend to the right. Then I'm going to make Fibonacci extensions. We'll start from here all the way here, come down here. Yeah. So this looks really good. And if you see, the levels are finding appropriate areas. So 79 if crosses can hit 80 to 85 on SE. So SE is positive, 82 and 85, 79, 30. And stop loss is 77 on SE. That's SE. Instead of MDB, I'm going to GLD gold. You see, the gold has risen all the way. So the same thing I'm going to draw. I'm going to draw with my regression channel. Start from the low of 150. Take it here. Extend to the right. Now, this was the last candle. So I'm going to make extension right from this point all the way here, all the way down here. If we can cross 185, we can hit 195. So 185 is an important area for GLD. The GLD is a breakout. SC is positive, GLD is positive. GLD is buy above 185.25. Stop loss is 183. Target is 189.65. And then 195.45. So risk reward in GLD is really, really good. Positive crossover. It's a good candle holding the gap. So it's all good. Meta. Meta received the news that they are going to get in a situation they might have to buy TikTok. So possibility to test this 12 EMA one more time is really high. It got rejected from the 206 area, which was 161 Fibonacci, and again from 100 to 161 got rejected from there. So Meta is the first short, rejected by 161.8. Fibonacci. Stop loss is 198. Sell on rise to 197. 195 to 197. Target is the 12 EMA. 190 and 186. 190.8, 188.86. Microsoft had really good, same thing with 61.8 Fibonacci. It just had back to back move all the way to 23 Fibonacci percentage. Now this gets really difficult. We might have a top here on Microsoft if market has to weak, because that Microsoft is really highly overbought in this time. So now if you want to try a sell on Microsoft, I'll try a sell with a stop loss of 281, and I will sell below 276. For 273, 266. It has really high strength in the market, but it could be a potential evening star. Go long above 281. Evening star is a bearish pattern, so keep that in mind. Netflix, it also did really good move. Like I was anticipating a 320 move, so it almost came to 317. Now it could not break 12 EMA, tested the 23% Fibonacci. So I think if market has to find support, 295 to 298 is a good dip buy for Netflix. So I really want to buy in the dip, not here, around 298, 300 area with 295 as my stop loss. And look for 307 and 320. So Netflix, I really wanted to come in the dip, and then I want to try this. Nvidia, extremely overbought. There is super strong strength in Nvidia. It can, similar to Microsoft, can become a potential evening star. It has not let down any of the 12 EMA moves since it broke out from 139. So 12 EMA is something which can be really important for Nvidia. But if I want to short, I will see if it fills the gap at 255 and only sell below 255. So I'm neutralizing Nvidia for now. I want to sell below 255 and want to keep 257.30 as my stop loss. Look to test 245 and 240. See, back test is really good. For 12 EMA and potential evening star. That's one of the trades. The other setups is you can buy 255, and if it holds the gap and manages to sustain around that area, you might try along. But as of now, 255 below, I would like to sell. Roku, Roku is an inside day. It tested the 12 EMA, and last time I mentioned that whenever we have this kind of move in Roku, it leads to breakout. So any dip in Roku to 62 area, I'll be by instead of above, by dip near 62, 63 will be really good. Team is consolidating really well in a very tight range. You see 1, 2, 3, 4, 5, 6 candles. It's holding 155 to the base. A test to 163, 164 is given. It's not going below this area, around 155 on the closing basis. So 155 is an area where I would love to try this. But if I can get near 157 to 158, I'm interested to buy this. Last but not the least is Tesla. Already, Tesla has a bearish engulfing day. The momentum is not so strong in Tesla. Either it crosses 184 and holds, or so buy above 184. I'll say 185. And stop loss should be 184. Otherwise, sell on rise. $182, because it usually comes to 182, 183 area and then gives back 170. Yeah. So these are the levels for Tesla. The higher levels are still the same, 190 and 199. Again, 50-50 chances. It's like relatively weak in this market for last few days. So guys, this is it from me. It's a little late for all of us. So thank you for being.
Naval bhai, MDB, can you do please?
Yeah, why you guys? You get all the chances and you still get stuck. I've been 2 years talking to you. I don't know what to do. You get the chance and you don't exit. I told you last time to exit at 220. It's making an evening star. It can come to 213 one more time. But Friday it went to 224 and you did not exit. I have no reason, no comment after that. It can come to 213 and 211. That's it. It's if it loses to 198, 199, it can come down to 150, but 197 is a good support for AMDB. All right, guys. Thank you very much. It's a little late for me. I'll share the levels if you can put me. How is pivot level different than fib levels? I do not use pivot levels. Top plus for yes. It is correct, 3960. Both is 3960. There's nothing incorrect. Thank you, Chris. Oh, you want Paul GE. Let me just do GE and finish it off. GE is going really good in the last few days. It's an inside day, and if it loses 89, I think it can go to 85. There's some support at 87. So 87, but I think it's time for industrials because you see on the line, it has making lower lows, lower highs inside day. So if it loses 989, 50, it can go down. Yes, NQ stop loss is incorrect. It was 650. Thank you. Thank you. The G can go down below 89. All right, guys. Thank you very much. Good night. Take care. Bye-bye.